So this is a chart of the US dollar index, right? As you can see on the right hand side of my screen, we have seen a pretty rapid ascension or an appreciation in the price of the US dollar relative to the basket of currencies which it trades against. What is interesting at the moment is if we have a look at the US dollar, all I'm going to simply do is change my daily screen to that of a weekly so I can usher in or at least include past years dollar price movement, old resistance levels, because it's very, very important where we're trading at the moment on the US dollar. At the moment, we're trading at 91.62 cents as a currency against a basket of others. When I change to the weekly, you can see why this level, or this level which I have drawn on my chart, is so important for the US dollar short term. What I can see happening in the price of the US dollar is at least a short-term consolidation and a slowdown at this level. As you can see, this is the current date. This is at Wednesday, the 7th of January, 2015. The last time that we have revisited these old levels, or this same value, at least for the US dollar, is going back all the way to mid-2004 and all the way back to late 2005. This is going back 9 to 10 years on the US dollar. Now, in the past, going back, the reason why I changed to the weekly, because I simply could not fit the amount of data on a daily chart. But if we factor in and go back this far into the distance, you can see that this level has acted as a very, very important resistance level going back to those two past periods in time. If I zoom out again even further, you can see that this level has also acted as strong support. So when we talk about support levels, there's different types of support levels and also resistance levels for that matter. There's macro support and resistance, which are really the big pivot points. These are pivot points which you need to pay attention to if you're looking at getting involved in a certain market, if you're looking at getting involved in a certain stock or financial traded ETF. Now, the reason why I'm bringing this specific price level up, and the reason why I'm saying that the US dollar is going to stop appreciating in price short term, or at least more so into an intermediate term, is because if we go back as far as 1998, 1999, you can see that this area acted as support. It also acted as support during the sell-off in 2003, or the depreciation in value of the US dollar. And then again, we get back to these 2 points which I've just referenced as resistance, going back to 2004 and also going back to 2005. Again, this is where we are trading at the moment. So let me just change the color of my drawing tool here. Again, support, red is resistance. We're trading up into this level. So again, the ascension in the US dollar, I do believe, is going to slow down. We did see a doji candlestick on the Monday. You can see also, if we zoom in on the detail, on the Tuesday, we have a hangman candlestick on the daily, or what is the Forex daily snapshot of the DX, or the dollar index fund. What I do believe is going to happen is that we are going to pull back. We're going to have a controlled retracement, so we can come back down to these lower levels, most likely back down to really the $88 level at a maximum. From here, this is probably where the strength of the US dollar is going to continue, if in fact this is more so a long-term primary breakout from the original entry down here at $81 or 81 cents, 81.61 cents. My apologies for that little mix-up. So the reason again why in summary this is important for the market is because generally when we have a look at the US dollar versus the markets, they're generally inverse to one another. So as the US dollar appreciates in value, or it increases in value, generally that's quite negative for the US stock markets. At the moment, they have been working more so in correlation, or in a higher correlation in the most recent history, which is quite unregular for the US dollar. Again, these like to work inverse. So if you can see the price of the US dollar potentially hitting some resistance, and we are expecting at least a short-term consolidation or a pullback, what does that mean for the price of US equities? What I'm trying to say is that when we have a look at the Dow Jones Industrial Average, you can see we're trading into a very important support level. When we have a look at the S&P 500, again, we're getting into this perspective box, this green support level on the S&P 500. When we have a look at the NASDAQ, and you can see that we're pulling back into the support levels which were once resistance in September 2014, you can start to really get an understanding of the structure for the markets moving forward, or at least rounding out this week and moving into the second full trading week of January 2015. What I expect to occur on the markets at the moment is that we are going to see some short-term buying pressure come back into the markets. I do believe we are going to sort of get stuck in this level on the NASDAQ, also on the Dow Jones Industrial Average, on also the S&P, and largely that's going to be attributed to the slowdown in the price of the US dollar. I just brought up the wrong chart. Let me just bring up the correct chart right here. I need to get rid of my pen drawing tool. I'm just going to bring up the dollar index, which is dollar symbol DX. And if this does pull back, it's going to give buying pressure and support to the markets, which is going to stabilize them, at least for this week moving forward. Very important pivot point again on the dollar. We are revisiting levels 9 to 10 years ago. You won't see any media type of stories on the US dollar relative to, of course, where we're trading at, going back all the way to 1998. Again, let me just change to this line chart right here. This is very, very significant for the US dollar, and I wanted to bring this to your attention relative to what the 3 US markets are doing and how that's going to influence the short-term price of these stocks, which we are following in the pro analysis list. So I hope this has been worthy of your time. I wanted to thank you for watching this analysis video, and I just wanted to share with this very vital piece of information which I'm looking at because there's a lot of, I guess, speculation going on with the US dollar and, of course, the price of oil trading at about $48 a barrel. Again, the price of oil is largely attributable to the ascension or the appreciation in the US dollar. As the US dollar increases in value, it makes goods and services or exports cheaper, i.e. in the way of oil for US citizens. And also the global oil market, as it is backed by the US dollar. If the US dollar appreciates in value, it means that you can purchase more oil, of course, with that same dollar. All right, it's simply a spread against commodities versus currencies. That's simply the relationship and how that ties into the US markets moving forward into 2015. So thank you so much, everybody. I hope this helped you out. Subscribe if you're not a subscriber of the YouTube channel. I'll see you all Wednesday as at market close for another market update. All the best, everyone. Goodbye.